Has Binance been banned by the FCA? Assalamu alaikum everyone, just a quick video from us reacting to the Binance FCA warning that came out over the weekend. There was a huge amount of coverage by the media on this topic, but unfortunately a huge amount of it was completely misinformed. In this video, we're going to cover four things. Firstly, what actually happened. Secondly, how does crypto regulation really work? Thirdly, what does this mean for you and your crypto investing? And finally, what are the lessons that we can learn from this incident about how we go about investing and researching investment in the future? Let's dive in. So what actually happened? What happened was on Saturday, the FCA announced a consumer warning against Binance, the company. Now, the media picked this up and they ran with it, and you saw all sorts of headlines saying that the FCA has banned Binance Group and FCA has banned Binance from the UK. But if you actually look at the actual warning, there's a very different story that emerges. In this warning, the FCA is saying that Binance Markets Limited, which is another company that the Binance Group, which is the main company that everyone else actually interacts with, you and I have accounts with, Binance Markets Limited, this subsidiary based in the UK, which is the only subsidiary based in the UK, is not currently regulated by the FCA to do regulated activity, right? Fine. But the thing is, this is not actually the entity that anyone is interacting with right now. So the media, when it covered this story and it was saying that the FCA has banned Binance, was at best completely ill-informed about what was happening, and at worst it was actively spreading misinformation about Binance and about cryptocurrencies in general. Let's now dive in to how cryptocurrency regulation actually works, and then we'll turn to what this means for you in practice. The way crypto regulation actually works is as follows. Buying and selling of cryptocurrencies is currently unregulated activity pretty much across the world, but certainly in the UK. What this means is that you don't need to be FCA authorized to be buying and selling cryptocurrency, which is the primary thing that Binance does. Then you have cryptocurrency derivatives, things like forwards, futures, swaps, options, and various different other exotic things that Binance has on its platform. This stuff, in the view of the FCA, should be regulated. And there's currently a bit of a tussle going on this very subject with the German regulator, BaFin, and Binance, again, on this topic. Binance doesn't think that they should be regulated. BaFin and other regulators think it should be. But the point is, in the UK context, this stuff should be regulated if, and this is a crucial thing, it were offered by a UK company. But the Binance Group is not a UK company. And so what it is offering needs to be regulated wherever it is based, whichever country that is, not the UK. In the FCA consumer warning, it says the Binance Group appears to be offering UK customers a range of products and services via a website called Binance.com. However, no other entity in the Binance Group holds any other form of UK authorization. In another website on decrypt.co, they actually spoke to an FCA spokesperson, and they said that they gave the responsibility to Binance to ensure they understood all the applicable regulatory requirements in the jurisdiction where they operate. In other words, the company that actually offers the stuff that Binance does, it has the responsibility to make sure that it complies with all the regulation in whichever jurisdiction it is actually based. So all of that sounds quite technical, but really simply then, cryptocurrency brokerage, which is the core product that Binance offers, is completely unregulated, and Binance is legally able to offer that wherever it likes. The second group is crypto derivatives, stuff that Muslims shouldn't really be buying and selling anyway because it's not permissible from a Sharia perspective. But this stuff is, in the view of most regulators, regulated. In the view of Binance, it is not regulated. And what I would expect to happen here is that Binance either takes quite a punchy line with the regulator and continues offering it via its offshore company, or it stops offering these products and it currently will just offer cryptocurrency brokerage, and then over time it might get the relevant licenses and then start offering this stuff. This, what happens here remains to be seen. But the bottom line is that the core product is and continues to be unregulated, and so it is legal to offer that without FCA authorization. What this means for you is, to be honest, not a huge amount. Binance Group is the largest cryptocurrency exchange in the world, so it is hugely profitable and it's hugely well financed. And so the key questions for you are really, is my money safe? My view is that you previously were with Binance, you didn't have any financial ombudsman service protection before or any FSCS compensation protection, and you still don't, because it wasn't regulated then and it still isn't regulated, and it won't be probably for the next few months at least. The second thing is, is your money actually safe? Is Binance going to collapse? What's going on? Is the FCA shutting down Binance? To that, the simple answer is, I don't think the FCA is shutting down Binance. That's not what they've said in their warning. And your money, as long as the Binance company itself is robust and does a good job of safeguarding crypto assets, then your money should be safe as well. If you want to play it super safe, then you can take the money that you have on Binance and put it into an offline wallet, or you can put it into a wallet that isn't on Binance. And so you know that worst come worst, even if Binance was to shut down, your money would be safe elsewhere. So bottom line is that if you are just buying and selling straight up cryptocurrency without any of the derivative stuff, then you should be, broadly speaking, perfectly fine. If you are doing some of the derivative stuff, then make sure that you're watching the news rather carefully, because the regulation will be impacting you sooner rather than later. There are some important lessons that we can learn from this entire debacle. The first is, always go to the source of the information. Don't trust even people like the FT, the BBC, the Guardian, whoever, because journalists, unfortunately, they jump on bandwagons and they copy paste of each other. And if the FT gets it wrong or the BBC gets it wrong, then other journalists see those guys as reputable and they'll start copying them. And then that spreads misinformation across the entire ecosystem. So make sure you go to the source. The second thing you should realize is that journalists are not well informed about cryptocurrencies, about regulation, about economics, and about business in general. So they will often make mistakes when it comes to reporting on this stuff. You must understand this, because if that's where you're getting your information from, you need to understand that they will have mistakes and misinformation or ill-informed views embedded in pretty much every article. And you see this when you actually happen to know a lot about that subject that they're writing on, and you can see some of the flaws with what they're saying. This is pretty much across the board. When it comes to news and journalism, you will always see these minor discrepancies. And that's not to say, by the way, that I'm saying, journalism is a bad thing, or, reading the news is a bad thing. You just need to be very cognizant of the fact that journalists are not experts in everything, and they will and they do make mistakes, and you need to keep that filter in your mind when you're reading their articles. And then the final thing really is, don't invest in media hype, because as we've just discussed, it can often be ill-informed, and make sure that you're basing your decisions on sound economic data and sound news. Until next time, Assalamu alaikum.